Good morning, Rob. It's indeed a pleasure to have Mr. Robert Gordon here. It's an absolute honor to be able to pick his brains on certain burning topics at this point of time. Rob joins us from Boston. He's a director with BAM Funds, Anchor Capital Advisors. He's an independent director of Advisors Investments Trust. Rob is a man who wears many hats, but extremely knowledgeable, a very relevant voice in the industry. He's here in person to answer a few questions about the American markets. Thank you so much for joining us.
Pratik, thanks very much for having me. It's a real pleasure to be with you.
So, Rob, aside from the human near-term economic and environmental disaster, what do you think how investors should consider the war in the Middle East, its economic and market implications? What are your thoughts on it?
Yeah, boy, that one changes by the day. I guess I'll talk about it from two perspectives. I don't know how to put it any other way. And again, this is from my outside in perspective, from a U.S. perspective. I guess I'll start with sort of the good news from a market perspective. Is the market is wonderful at ignoring things like, you mentioned sort of the human cost, environmental cost, some of the long-term implications of what's happened in the region as the result of this conflict. The market just really wants two things: stability, relative calm. I hesitate to call it peace because I'm not sure that's what any kind of outcome will bring, but stability. And most importantly, the decline that we're seeing in oil prices as a result of the potential, and I underline potential, end to this conflict, because as we know, it changes not by the day, but by the hour. And we have seen oil drop precipitously, right, from a high at the peak of this conflict of somewhere around $120 a barrel, which, again, by many pundits' expectations, still was well south of what some folks thought it would reach in terms of dollar heights. But the market sees that as okay. The primary concern of inflation as it relates to energy-related products and all the follow-on impacts. And that's why you see the market continue to rise, even with sort of the rough uncertainty that we're dealing with. In terms of some of the other, regional impacts, the challenge is this conflict may be put to rest on a, near-term basis, but long-term significant issues still exist. If you run through sort of all the players in the conflict, you start with Israel, and Israel's motivation is that they perceive this continued existential threat from Iran and from Iran's proxies. And while that may have been stymied on a short-term basis, with this deal that's coming out of Washington and Tehran, potentially puts billions and billions of dollars back in the hands of the Iranians to rebuild their own economy, rebuild their own military, and unfortunately continue to send arms and armament and sustain their regional proxies, Hamas, Houthi, Hezbollah, etc., which puts Israel in an even worse position. So I think Israel's come out on the short end of this. If you move down the list, the U.S. itself, what were Trump's objectives? Regime change, which of course doesn't appear to be in the cards as part of any deal. The U.S. wanted economic and political stability, security, the disarmament of Iran, the denuclearization. Even with nuclear being a centerpiece of this deal, I'm not sure that that'll be the long-term effect either. And most importantly, what Trump wanted as part of economic stability was a continuation or a revitalization of the Abraham Accords. And the objective of the Abraham Accords was to bring, from a U.S. perspective, greater economic prosperity or economic exchange between all of the players in the region. And one of the underlying components of the Abraham Accords was that it would bring international confidence to the region, so that outside investment would pour into the region, which would be in global interest, not just U.S. interests. And as you and I have discussed in the past, there, at least on a near-term basis, international confidence is probably at a low point. So U.S. interests have not been met through this conflict. And then, of course, you have all the other countries in the region. No one ever expected that Iran would attack the neighboring countries, but because of U.S. relationships, Iran has done a very successful job at leveraging that, which has caused harm to those relationships. So on a near-term basis, I would not herald this as a shining example of U.S. global influence, rather the opposite. But again, from a market perspective, Trump said the market loves the deal. The market has no idea what's in the deal. And frankly, the market doesn't care what's in the deal. What the market cares about is relative peace and stability in the region, and what's happening to commodity prices. And they're on their way down. So the market is able to discount future conflict, the inflationary impact of rising commodity prices, and that's why we see the market continue to do well in spite of potential longer-term impacts of this ill-fated exercise by the U.S. So that's my glass half full and half empty comment on that comment. A little bit of both.